Welcome, folks. This is yet another video for pound USD. So today we had two setups, just like we had on EU. So during the London Open kill zone, we had a run on sell side right there, and then we reversed, going into a premium, trading inside an old fair value gap right here. We had also two consecutive candles, which are a bearish order block. Also, we had the inversion fair value gap right here. So you cut through candles, extend that through. It went to a premium based on this low to this swing high, that is to a premium. And then we had we traded inside this fair value gap. So with that, and also as you can see, this was quite shallow, and this to me was just like a Judas win, a false move. So but it's tradable, provided you know the time you to get out of that trade. Don't just hold and anticipate for maybe a run above this size, or you should have at least narrative of where price is headed to, and from that now you can frame other entries. So you could be going long right here, offsetting your positions right above these the midpoint of this fair value gap, and then anticipate now for a run down, because this was too shallow to run on these the sell side. So it was too shallow. So we had this run being a Judas, then now the real move. So as you can see, this was also in between the London Open kill zone. So we had that. What could we be aiming for? We had these lows. They were quite relative. And then we had the midpoint of this range, from this swing high to this swing low. You find the midpoint. That should be your next draw on liquidity. This being, maybe you take some partials right below these lows, and then hold at break even for a run into the midpoint of the entire dealing range. So we had that, and as you can see, we nailed that quite aggressively. So we had that. We also traded, as you can see, we traded inside this inefficiency, and right now we are gravitating to the upside. So that's quite simple. This was at around 11. So we have 11, and we have that run to the upside. So we had this buy and we had this sell. So if you head over to the 1 minute chart, we had yes, so now we had this. We had this. We had so there are many entry models that you can use. These are a bullish order block right here. So this an order block is always a change in the state of delivery. So as you can see here, we were on an uptrend, but now this was the only down close candle that appeared inside the uptrend. So that automatically becomes an order block. So we had that, and as this candle was digging inside the order block, could be going long in that, aiming for these highs and eventually maybe the midpoint of that inefficiency. So getting your long positions right in there, placing our stops just below that low, because as you can see, this candle right here took out sell side that was residing below this relative equal lows. So there was no need for price to come back to this level. So placing your stop right there and then aiming for the midpoint. So never neglect a fair value gap, whether it's an old fair value gap. It always takes precedency over everything else. So that was it. That was an 8.06 R trade. So it had that, and then now this would have been your take profit, and then no holding for more, because as you can see, we headed over to a premium. Now we have to go short because this was very shallow. So price will revisit that, because people will treat this as an area of support whereby we attack that. So we had also we had this swing low being taken out right there. We had a fair value gap right there. So we could be going short in this fair value gap, placing our stop just above the inefficiency right there. And then we aim. Our first target would have been these lows right there. So that is our 4.79 R trade. And if you were to hold for the entire daily range, maybe you could have gotten something big. So we have to aim for the entire daily range. So that's a total of 20.21 R trade. So those were the two trades. Right now we traded inside that the inefficiency. So as you can see, we had a good shift in market structure. We had an inversion fair value gap right here. As it was digging inside the inversion, could be going long in that, placing your stop just below this low, and then anticipate for a run. You just measure the midpoint of this daily range, and then you place your take profit just below that. So that was it for today, and I guess you've learned something. These market reviews are always to enlighten you on how the market has been, and also to encourage you to continue showing up every day, because if you keep on showing up every day, that becomes very powerful, because you'll always know what price is about to do next, because you as a trader, you are used to seeing that particular thing happening every single day. So it becomes a good practice and discipline for you to show up every day. Look for the same things that we always talk about here, which is time becomes the number one factor whenever you are taking a trade. So trading is quite simple. You just have to have narrative, go with whatever the chart is giving you. Don't try to force a trade. You just go with whatever the chart is giving you. So I guess that's it for today, and until I talk to you next time, be safe.